So you're a first-time home buyer and you're worried about making the biggest financial decision of your life in this crazy market. Or you're looking to get into your next home and you're worried about whether or not right now is a good time. I'm going to walk you through the most common objections that people have when considering whether or not they should buy a home right now, and I'm going to show you why I think right now is actually a great time to buy. But before we get started, don't forget to smash the like button and subscribe to the channel so you don't miss any future real estate or finance content. All right, let's get into it. So let's set the stage for what's actually happening right now in the real estate market. Over the past 2 years, we've seen home prices increase by about 30% nationwide. This is the largest and quickest increase we've ever seen ever before in the housing market. So this has led many people to be really concerned with what's happening. Are these high prices sustainable or not? These high prices were driven primarily by institutional investors flooding the market, like Zillow and Opendoor. The pandemic just causing extremely low supply in the market because people didn't want to move, and record low interest rates. So this has led a lot of people to start claiming a housing crash is imminent, and they're recommending that nobody buys right now. And with the Fed tightening monetary policy, we're seeing interest rates rise at a faster rate than they have literally ever done in the past, which is driving interest rates up. We've gone from about 3% earlier this year to now we're over 5% for a 30-year fixed mortgage. So what should a first-time home buyer do? As I place myself in the shoes of a first-time home buyer, I think of 4 primary concerns that I would have. And I'm going to address each of these concerns one by one so we can talk about what's actually happening in the market and what should you do. So concern number 1, and probably the biggest one, is I'm worried that the housing market is going to crash in the next 6 months. So I think the best way to understand what might happen in a future crash is to understand how previous crashes have affected us. Okay, so let's take a look at the Fred housing market data. So this is showing the median sales price of houses sold within the US since about 1963. And just take a look at this curve here. You can see that there's not really any major blips. It's very, very infrequent that there's a major dip other than in 2007. So what we know in 2007, home prices declined about 19%, and it took a full 4 years for them to return to the same levels. So this is actually the worst case scenario that we've ever seen before. So 2007 was obviously the housing crisis. We only saw a 19% decline. So I think this is actually the worst case scenario we could see ourselves in. So if we look back to some of the other crashes, specifically in 1980, this is actually what I think is most similar to what's happening right now. So in 1980, there was massive inflation, even greater inflation than we're having right now. And we saw a very small dip, less than 5%. And within 2 or 3 months, the housing market was continuing to rise. So here in 1990, you can see another small dip. Within just a couple of years, the housing market had returned to the same heights as it was before. And then we have here in early 2000s, the dot-com boom. The housing market peaked here in the second quarter of 2001. And then within 3 quarters, it had jumped back already to heights that were greater than it was before. So you can see from a worst case scenario, the largest crash we've ever had in the past was a 19% decline. And within 4 years, the market had completely rebounded to the same levels. And I think that's the absolute worst case scenario. And with the other recessions or housing market crises, we're seeing dips of maybe 5 or 6%, but then the market's recovering within just a couple of quarters, maybe a year, year and a half tops. So I think this is a really important point to drive home. Literally, the housing market has never dropped more than 20% ever in the history of the data that we have. An important caveat to this is, of course, certain markets may have seen greater declines at certain periods of time, but on a national level, we've never seen anything more than 19%. So I think those of you who are waiting to time the market, wait for that big 15, 20% decline, you're effectively gambling on the market to do something that it's literally only done once previously. And I think that's a huge risk to take. So I think actually the bigger risk here is not buying a house and the market doesn't crash or crashes much later than you think it will. I actually have personal experience of this with a couple of friends who didn't want to buy because they were worried the housing market had increased too much. And now many of them have been priced out of the market completely. So now they're not able to get the size home that they were originally wanting or in the same areas. So I think that's actually a bigger risk than the market crashing. And a really important question I think you should ask yourself is, how confident are you that you will actually be able to time the market? Remember, buying a house is a pretty long process. And as I just showed you from the data, there's been very few valleys or entry points in the market at the lows. And those would be very difficult to time given, finding a house, getting qualified, the whole loan process, everything can take a couple of months. So let's actually address the point that the market might actually crash after you bought a house. What happens to you? Honestly, nothing. As long as you're planning on staying in the home for 3, 4, 5 years or more, as I showed you from the data, it's very likely that even if there is a big crash within that amount of time, your equity will have recovered and you will no longer be underwater in your house, and you could sell your home and make a profit anyway. And if you're interested in hearing more about what I think is going on in the housing market, click that link right there above my head, and you can check out the video where I walk through the drivers of supply and demand on the housing market and how that's affecting it right now. Okay, so now let's jump to the main concern number 2. Interest rates are just too high right now. So it's true, interest rates are much higher now than they were at the beginning of the year. Interest rates have gone from about 3% to now well above 5%. And the Fed has actually signaled that they're going to raise rates another 3 times this year. You can generally expect if the Fed increases rates, mortgage rates will generally increase as well. And I think the great thing about interest rates is that if they ever come down, you can always refinance. I've done refinances a couple of times. It's always been a really smooth, great experience. So in the event that interest rates do come down, maybe from 5% to 4% or even back down to 3%, you can always refinance whatever loan that you had originally and get a new loan. So honestly, interest rate risk shouldn't be a concern of yours at all. The biggest risk is not locking in a rate now because again, rates are probably going to go up toward the end of the year. Okay, so now let's jump to concern number 3. There just isn't much inventory and I just don't want to get into a bidding war. Now I think this is a pretty fair concern, and it is true that inventory is at a record low right now, but we are seeing signs that this is starting to ease. Okay, so let's jump over to this Redfin article about second home demand that I think illustrates how demand is starting to soften. Okay, so in this paragraph here, as monthly mortgage payments skyrocket, buyers are quicker to back away from second homes than primary homes. Sky-high prices and soaring mortgage rates were already deterring buyers, and the new loan fees, along with weakness in the financial markets, are an added obstacle. While second homes are still a bit more popular than they were before the pandemic, it's safe to say that the vacation home boom is over for now. Okay, and let's take a look at this graph here. You can just see the red line here is secondary homes, and the blue line here is primary homes. And you can see the demand for secondary homes skyrocketed during the pandemic, but then has fallen off a cliff recently. And I think this is largely due to the massive increase in interest rates. So this interest rate increase, I think, is working as intended. And you can see secondary home buyers or investors are really falling out of the market very quickly. And a lot of this demand is now slowing. And honestly, given that interest rates have increased so rapidly, it just doesn't make sense for investors to purchase right now. A lot of them have been priced out. So real estate investors look for a spread between what they're paying for the home and what they can rent it out for. And because interest rates have skyrocketed so much, they're just not able to make a sufficient return to make investing worthwhile. And honestly, I know this because I am a real estate investor and haven't been able to find anything worthwhile since the rates have increased. And I know many other investors are feeling the same. So this is great news for first-time home buyers because it means there's a lot less competition and you're dealing with a lot fewer investors in the market right now. Okay, on to our 4th and final major concern for new home buyers. They're worried about actually being able to afford a home. It's an expensive purchase, and obviously a first-time home buyer has never done anything like this before, so I think it's reasonable for them to be concerned. And honestly, I think the best approach here is to speak with your loan officer. Search around on Google for loan officers or compare mortgage rates and reach out to a couple of them, and it's really important to get pre-approved right now. If you had a pre-approval that was good for a couple of months ago, it's absolutely not going to work anymore because the rate landscape has changed dramatically, and what you could have afforded 6 months ago is going to look very different from what you can afford today. So I would say to anybody out in the market now, speak with a loan officer and get a pre-approval, understand what you can actually afford right now given the interest rates. And before you actually speak with a loan officer, if you're curious about what a general rule of thumb of how much can I afford in a house, is the 28% rule. So take your gross monthly income and multiply that by 28%. That will give you just a general sense of how much you can afford per month on a home. And this is probably on the conservative side. So if you do go get a loan estimate, I wouldn't be surprised if you see that be higher, unless you have a lot of other student loan debt or credit card debt or something else going on. But if you are in a financial position where you can comfortably afford a home that's in a price range that you're interested in, I don't see any reason why you shouldn't jump into the housing market right now and buy. If you're one of those first-time home buyers that's waiting for the market to crash so you can jump in and get a home on the cheap, please don't gamble on that. Remember, you're betting that a significant market crash will happen that has only happened literally once in the history of the housing market before. I think that's a really big bet to take, and it's a really big risk, and you have to be prepared for the consequences of whichever direction it goes. So what would be my overall advice to you? Find a home that works for you and your situation and go for it. All right, guys, that wraps up the video. I really hope you found it useful. Don't forget to smash the like button, subscribe to my channel so you don't miss any more great content on real estate, finance, and business, and I'll see you in the next one.